Hey guys, I just want to talk to you about subject to financing. 9 out of 10, actually 9.9 out of 10 circumstances I would highly recommend getting subject to financing just for your own security. In most cases, when you talk to a mortgage broker or a mortgage specialist, they're going to give you the ballpark after looking at your statement of earnings for your job, a couple of pay stubs, give you a ballpark of what, with the price range that you are putting, or sorry, the price range you're looking at purchasing, the amount you're putting as a deposit or your down payment, and the interest rates, so on and so forth, what you would be allowed to borrow. This is kind of a pre-approval. They'll do this in most cases without actually dinging your credit and going in. So being pre-approved, nothing is secured, but they're giving you a very close ballpark of what you would be looking at being able to afford. So then when you go in and you've found the property you want to purchase, you're putting subject to finance. So then once they go and do the credit check, assuming the credit check goes A-okay and there's no kind of dings in your history or anything, you're good to go, then you're fine. But if they do that credit check and something is found, or for whatever reason it doesn't turn out as positive as you would have liked, then you've got this subject to financing in place to say, okay, I cannot fulfill this subject, which is subject to financing, and I cannot make the payments on the mortgage that I would need to hold this property, so on and so forth. So I will not be removing this subject to financing because I cannot, plain and simply, afford the property. Or obviously, if you did get the approval and everything went positively as planned, then you would just remove that subject to financing. That, I don't want to call it a loophole, but it's kind of a safety net for you, for your security in the deal. Because if you went in, for example, no subject to financing, like we heard a lot of in the peak of the market pre kind of May 2008, a lot of people going in no subjects, which obviously includes no subject to financing now, obviously thinking that their financing is fine, their bank histories are fine, going in, they've got the negotiated offer, it's all accepted, subject free, so good to go. Then you go to your bank and say, I need to borrow X amount of dollars, and they say, well, you can't for whatever reason. You are still legally bound to that contract. And being legally bound, you cannot go back to the seller and say, sorry, I can't afford to buy this property, please let me off the hook, because you will get sued and things will proceed from there. So it's basically a safety net for you that I would definitely always recommend going in. You'll find circumstances maybe in the hotter markets that your subject or your offers will be much more appealing, and in competition for multiple offers to go in no subjects. That is 100% your decision. If any other agent tells you otherwise, don't listen to them. It's always your decision, obviously, what is put in the contract. This is just a part of that, and it may be more appealing. It may be a more appealing contract without subjects, but if that's in your best interest, is kind of for you to decide at the time. If you do have any other questions about subjects in general in the contract of purchase and sale and buying your first property, or the subject of financing particularly, please don't hesitate to give me a shout or email at any time. Thanks again. Bye-bye.